Hi and welcome back to Cheeky Crypto. Today guys, we're going to be diving down into a fair amount of data to take a look at whether or not we are going to be going into or are in a crypto bear market or crypto winter. As we get into this video, if you find it useful and informative, hit that like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe. Tap the bell, select all notifications, and in doing so, you are going to be kept up to date with everything that we do here at Cheeky Crypto. Right, let's get right on into this. There's a lot of important information that you guys absolutely have to know about. So let's jump on down and get right on into it. Okay guys, this is a familiar chart. You guys will be familiar with it because it is something that we've spoken about a fair few times in the past, right? This is basically Bitcoin paired with USD. This is the daily chart, and you know, it is on the Bitstamp because it has the most amount of data. And, you know, I've dissected this down into lots of different areas, and I kind of want to just talk about this briefly before kind of going on to the more important steps. Okay, so do bear with me here. So obviously, you know, let's actually go back into this kind of low range here from 2012 through to the peak up here in 2013, and the kind of volatility that was there back in the time. Now, obviously, the value of Bitcoin was significantly lower in this particular time period than it is today, right? This is a pretty obvious statement, but hopefully you guys are familiar with what happens when prices are low. Obviously there is volatility, okay, and basically the higher the price, the lower the volatility becomes. And you can see this with the percentage gains, right? So it's not to say that you can't drop down, you know, 80%, you know, anything like that. What I mean is you went from a really low base down here to a reasonably high base here, and this was 24,000%. Okay, so really volatile. Okay, volatile in the positive sense, because obviously if you bought down here and you sold up here, you made significant gains, right? Another obvious statement. So obviously we start to come back down. We had the pullback in you know, 2013 down to the lows of 2014. And again, I can grab hold of another kind of price range. I'm surprised it's not here. I would have thought I would have measured this, but maybe it got deleted at some point. So that's an 86% drop, right? And we went 24,500% up, and we dropped down 86%, right? Volatile. Now, obviously from here, we then actually pushed up from this low point. And again, you can actually argue that this is where a bull run actually started after this this value was lost, and that went up only 5,000%, right? And that was pretty much from 2015 all the way through to the 2017 highs, right? Not the 24,500% that you have seen before, just 5,000%. Okay, so we obviously know that it's diminishing returns, another obvious statement, but this is because the value of the actual coin itself is higher. It would be, you know, ludicrous to think that you're going to have 24,500% gains on something that was, you know, $100 at the time. Obviously, to take it up towards that $20,000, it would have been significantly higher than that on that particular time around. Okay, cool. So as we kind of move along this timeline, we can obviously see that we actually found a low point just up here, and this is actually end of 2018, beginning of 2019. We pushed up, and then obviously the pandemic pulled us down into this kind of dip over here, and then we actually continued to surge up to May 2021 or May 2021, $65,000. It was a 1,672% in gains. Okay, we then pulled back and we set another all-time high. Now, these are different to what we have seen previously. 2013 is the closest we have to understanding that we've surged up. We thought we were in a bear market here, but then we continued to surge up again, okay? And if I actually just focus in and zoom in a little bit here, what you can see right over here is that actually, you know, we were very volatile during this time as well, right? It wasn't just straight line to the upside. You know, we were arguing that, you know, we had that point up here, an all-time high, we pulled back down, we bounced, and we actually continued to kind of lose value, but we never actually went down lower than this point that we actually initially pulled back on. And this is an important thing to just note, okay? So we come back down here, it was an 82% pullback, right? You could argue that that is a bear market, but was this entire thing here a bear market? Right, that's the question. It could have quite easily been, and for the most part, you could articulate it as a bear market. or a bearish phase, right? And I think that's probably the better way of articulating it. And before we actually went up into new all-time highs. Now, what's really important about this 2013 data is that this this prolonged sideways trade moment before having this blast off the top was a 231-day period, right? Whereas crypto winters we last 1,400 days. Okay, so to start to think about, was it a bear market? Was it a crypto winter? Was it, a bearish phase? A 230-day period of kind of volatile, kind of pushes up and pulling down, more of a triangle more than anything else. And what we mean by that is if you draw your high points and you draw your low points, you're finding yourself into a kind of triangular wedge and then a blast from there, right? So again, triangles are really powerful things. So I'm not going to go into too much detail on that, but that is what it is. And you saw the blast to the upside. So a lot of people were talking about this being a bear market back in 2013, 2014. Or 2013 really, and they're not necessarily wrong, but the assumption that you're going to be going down for a while isn't necessarily held when the data isn't suggesting that you're in a bear market, right? We actually continue to go up. Now this is important because where we are currently is in a very similar situation. Okay, we had the surge up, we pulled back down, we surged up higher, and then we pulled back down. Now what's actually happening here, and I've articulated this before, it isn't a standard. And you're not going to really find this on a lot of other influencers, unfortunately. I wish they kind of would articulate some of these different patterns a little bit. But what you've got is you've got a top just here. We'll call this origin. You then have your initial pullback down here, which is your first kind of local bottom. You then actually surged up higher, just up here. And it's very possible that we actually come down just over here. Okay, and this is not an easy thing to invalidate. It's something that is going to stick around until one of the two scenarios kind of crops out. So what is actually going on here is an expanding triangle. That's one way to articulate it, or an expanding flat correction, which is the correct way, in my opinion, to articulate it. So we have the A wave here, we have a B wave higher, and it's very, very probable that there is going to be a C wave lower. Now, obviously, there's lots of different ways to kind of count your corrections in here. I've been doing lots of counting on Bitcoin's chart on lots of different timelines over the last few months, right? And anyone who follows the channel will be very, very familiar with this. For the most part, I was calling out $31,000. Most of the timelines were indicating somewhere around that $31,500 range. We actually gone down to 32 or just a little under $33,000. And for the most part, that was actually okay to see that as a bit of a bottom. And what we actually mean by that was here was an A, a B, and a C. Right, we could have gone down a little bit lower, we didn't get the 1-to-1 ratio, but again, that's just the most probable area. It doesn't mean it's going to be a guarantee that that's where you go. And obviously on this journey to the upside, we went higher than our A wave here, for example, right? So this actually gives us encouragement to say that there's some other kind of pattern going on here that we should also be very, very mindful of, right? We've had the pullback, we've bounced up, and this in itself could be forming out, and I say could be because we won't know for sure just yet, a B wave higher before coming down into this low C range target down here. Okay, which of course completes our larger pattern of a flat correction. After the flat correction, guys, I would be expecting an explosive move to new all-time highs. Okay, and again, we have this measured out in lots of different ways, and I'll quickly just show you what's actually going on here for Bitcoin on this larger time frame, which is actually a daily just zoomed out. But effectively what we have is wave 1, wave 2, wave 3. All of this is wave 4, and then you come up into wave 5. Now, anyone who follows Elliott wave theory will know that your correction here, we'll assume it just comes down towards $26,000 hypothetically. The minimum kind of threshold for this fifth wave would be a 1.618 Fibonacci relationship, which basically puts us at about $115,000. Now, I've actually done this and drawn this up properly on our Binance data here, so we can actually see it here, actually $114,864, right? So right up in that sweet spot. So as I try to articulate this down for you on Bitstamp here, so you can see a little bit more of the information, we are looking at new all-time highs. This fifth wave should be comprised of 5 waves in itself. Okay, and once we're actually up here, this is where I think we are going to see that significant drop of 85% of the value, right? And it should be a pretty swift drop down from that point. That is what triggers the bear market, in my opinion. Obviously, there are a couple of things that I've been talking about in the past as well that haven't quite played out. So let me just bring up the Gaussian channel, which you guys will be familiar with, and we look at this on a weekly time frame. And what I'll do is I'll expand this up, right? So the Gaussian channel, if I come back over to the history here, we can see that every time we closed inside it, it led us into a bear market where we actually had, huge value dropped, and we obviously saw the value or the Gaussian channel turn red, which is the maximum value then added to Bitcoin, where you want to potentially be buying it up, ready for what is due to come next. Now, obviously in 2017, very similar situation, right? We closed inside the Gaussian channel, and it led to a bear market. Now, when you've closed inside the Gaussian channel, we haven't automatically closed above it. Once you've closed inside it, you stay inside the channel or fall under it. The same thing happened here in 2013, 2014, right? We closed inside it, we stayed in the channel, or we went below it. We did not do what happened this year around, which is completely thrown this whole analysis. But basically, we pulled into the Gaussian channel, we closed inside the Gaussian channel. The very next week, we closed outside of the Gaussian channel. That's never happened before in the history of Bitcoin. So therefore, we cannot use this as an indicator of bear market per se. Okay, this basically means that effectively the history was essentially just pure fluke, that we actually had closed candles consistently inside it, and the Gaussian channel could be a good indication of bear market. That one candle there basically tells me that I cannot rely on this indicator as an indicator of bear markets or bull runs. Okay, what it can do though is obviously give us the idea or the notion of where the value is going to be added. Okay, we can obviously see that we closed inside here and we actually still continue to run. So we obviously know that something strange was happening ever since 2020. So what we can do though is when it turns red on our weekly chart, we know this is an optimized area for purchasing. So we can still use it for that, but we cannot use it for Gaussian channel in the sense of bear markets. Okay, so knowing that we are in a flat correction, at least that's the pattern that I wish a lot of people would actually start talking about. We should probably now talk about what happens with Bitcoin during these bearish moves, right? These bear market makers, if you will. So obviously 2017 we had the high, and we crashed down 69%. We bounced up, and then we dropped down 44, and then we continued to drop down from there, right? It took a little while. In fact, this entire run took quite some time to reach the actual bottom. It was a 364-day run, okay? There was no new all-time highs set in the middle of that. Come over to 2013 here, we had that drop come in of 67%. We actually then kind of continued to go all the way until we reached the bottom, which is an 86% drop. Okay, so as I come back up into 2021, we can see a 56% drop here from April down to those lows. And obviously this recent pullback that we've experienced so far, we can go ahead and measure that distance, and that comes in at, again, 52%. Okay, so they are not as severe as what we had seen previously. And obviously after the 56% pullback, we went up and set a new all-time high, which has never happened in the history of a bear market. It would have been the smallest bear market known to man. Now, obviously, if we come down to that $25,000 range or $26,000 range, then that's a 62% pullback. That is a really worrying area. And if it was not for the fact that we actually have here, the A, B, C kind of expanding correction, and what I can do is I will make that a little bit clearer. So from the high over here to the new all-time high of $69,000, through to the low that we had over in June, and through to a potential low coming in down here for a C wave, you actually end up with this expanding triangle, or an expanding flat correction, as in we're just correcting inside of it. The B wave goes higher than origin, and the C wave goes lower than the A wave, right? And again, just because that is what is kind of being in here, doesn't necessarily mean that's also going to happen. It doesn't mean that we're going to go down to $25,000. I think actually we aren't necessarily going to be having the expanding flat. I reckon we're going to also be, or should potentially be, acknowledging that actually it could just be, I guess how do I articulate it? It's not a standard correction, but it is a regular correction but on a trend. Okay, so if I grab hold of our trend lines here and actually take this up to that $32,000 range, and if that is in fact our end of our C wave, which is a high possibility as well, what you have here is basically a trend-based correction. Again, it's sideways trading, and it is a continuation pattern. To look at this another way, we could also articulate this as a potential kind of bull flag. There's so many different ways you can look at it, right? But one of the things that is not really very apparent here is the bearish move, right? For a bearish move, we would expect to see some kind of impulsive action to the downside. So let's take a look at 2017, and I'll show you what that might look like, right? So what we have is this initial pullback, a bounce up, and then we fell down significantly further. Okay, a very, very impulsive kind of look. And again, 1, 2, 3, we bounce up into a fourth wave and come down into a fifth wave. So we have that right there. Then we have an ABC up, and then we have 1, 2, and then 3 coming down, potentially around about here. Yeah, it's somewhere in this kind of range, this kind of flat correction. Again, this is actually then very much a bear flag. You can see this right in there as well. So yeah, this is what you'd expect to see from a kind of bearish kind of scenario. These patterns playing out just here, more impulsive than what you have on our current time frame. Now, if I come over to the 2013, what do we have? Now, it's actually quite a choppy one, this one. You actually have quite a lot of volatility in here, and I think this is down to the price at the time. And again, you still end up with this really sharp bounce the upside, not doing too much, and then collapsing down. And again, there is a lot of overlap in here. So again, not necessarily an impulsive move for 1 through 5, but the actual nature of the movements are very, very impulsive. So you get these sharp kind of corrections and short bounces, right? So let me grab my pencil here. We get the sharp kind of correction, short bounce, sharp correction. Okay, and this is not what we're seeing currently. If I come back over to the regular time frame, what do we actually have? We actually have quite a lot of bouncing activity here, and the bounces are quite significant. So right now, this isn't anything to necessarily be concerned with. The other thing I do want to kind of take a look at is that Stochastic Rsi. This one actually looks like it's in a really good position, a really low Stochastic Rsi. Now, when we actually take a look and we think about where the actual bottom of a market is, the Stochastic Rsi is right down at the bottom, right? I did see a couple of comments saying, a high Stochastic Rsi, that's bearish, right? No. A high Stochastic Rsi, well, I'll say a high Stochastic Rsi is bearish, a low Stochastic Rsi is bullish, right? So when we actually start to see comments saying, oh, the Stochastic Rsi is really low, that's a sign of bear market. No, that's basically saying that you've had a correction and you're ready for the next leg up, right? So here at the bottom of this 2018 data, before we rose up significantly, we just grab the volatile needle here, 347%. We were oversold during that time. We rode it up into an overbought area. Okay, we take a look at where we were at the bottom here for the 2013, again, oversold. And then we started to really slowly kind of work this one up. And you can see how we're bouncing around quite a bit during the 2017 bull run. And the other thing that's really apparent here is these pullbacks, 37%, 42%, 40%, 35%, 34%, 40%, 39%. These are pretty much standard corrections on the journey to the upside. In 2021, what did we experience? Hardly any kind of volatility. Right? It was a bit of a shock to the system with a 56%, but not many profits were taken on that road to up. 21%, 32%, 25%, right? Then 56%. Okay, we rode it up again, pull back another 52%. So right now, actually, this is actually really encouraging data. It's not anything to kind of be worried about. We know this is a fourth wave. We know this is a flat correction. We know that what is likely to come is going to be an impulsive move, taking us up into new all-time highs. Now we come over to Glassnode data, and we take a look at what is going on with Glassnode. And what do we have? We have accumulation. Okay, so we basically have all of this Bitcoin leaving the exchange, right? This is the net difference of all Bitcoin going in and all Bitcoin going out. What is the net difference? Well, Bitcoin's leaving. And it's leaving by the thousands, right? So overall, significant volume has been leaving the exchanges. Now, obviously, Bitcoin's price has been pushing up recently. So when you take a look at the balance of Bitcoin on exchanges, it moves up, even though the actual number of coins are leaving the exchanges. So really important to know that. Now, as we come back up into that position or net position change, I want to expand this out to take a look at what was going on during 2018. Just over here, right? So if I actually now bring this up, what does a bear market look like, guys? A bear market looks like this. It looks like people are loading up Bitcoin onto exchanges, trying to offload it before it drops its value down to 86% or 85%, 90% of what it was. And this is what happens during a bear market. What do we have right now? Well, we have this. This is accumulation. This is not bearish. We also have this. This happened in May. So this is the kind of spike that we saw when we saw an initial sell-off and a lot of fear in the market from retail investors piling Bitcoin into the exchanges and selling it. And then obviously after that, we saw significant volumes leaving the exchanges. And again, this is exactly where we are right now. So I really wanted to kind of articulate several things here that I think are really important for people to know. Are we in a crypto winter? I do not think we are in a crypto winter. I think we're entering a new phase altogether where crypto winters are no longer really a thing. I think there's new players in the space that are going to be taking a look at the market and thinking we can continue to push the needle in the direction that we want because it's unregulated. And as a result of that, you're going to see these bull phases and bear phases. I don't necessarily believe that we are likely to see those, year and a half long bear markets anymore. The other thing I really want you to kind of take away, guys, is the volatility that we had seen previously is no longer there for Bitcoin. We obviously have a couple of volatile spikes here with this in this last kind of leg of this bull run. If this kind of just continues after 5 waves up, we might just see, a nice bearish phase that lasts maybe, half a year to a year, and then we kind of carry on. But we haven't actually experienced the same volatility that happened previously. I also want you to kind of know that there's a lot of accumulation going on in the background. This is something that we talk about quite a bit with our Patreon members and in Discord. Something that I think is really important that we know, right? That there are people out there, there are whales, there are institutions actually accumulating Bitcoin right now. And they have been doing it pretty much from September last year. So do ask yourself this, why would Binance buy 43,000 Bitcoin, at the back end of last year if we were going into a crypto winter, if in fact we were in a bearish scenario after setting the all-time highs? They would not have done that. That would not have made good financial sense for them. Instead, what you're now actually looking at is a significant amount of adoption happening from institutional players and whales. And what they are doing is actually manipulating the markets, pushing the needle in the right direction, and are basically kind of making you feel that you need to sell because you're in fear of a crypto winter or a bear market. And what they are doing is buying up that fear, stacking it up into cold storage off of the exchanges. At least that's my opinion. But I present this data and it is important that you kind of draw your own conclusions from it. I am not a financial advisor. I cannot offer you financial advice, but hopefully this video has kind of given you a bit of an idea as to what's actually going on here in the crypto space. Guys, with all that said, done and out of the way, if you have found today's video useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you are going to be kept up to date with everything that we do here at Cheeky Crypto. With all of this said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.